We've got the rand trading around 7 rand 3, 7 rand 4 this morning. Of course, yesterday touching 6.99 very briefly at one stage. And it looks like a perfect storm at this stage. We had some decent economic data yesterday. And of course, we had the Fed's announcement the day before.
Yes, absolutely, Stephen. I mean, it's quite a potent mix, as you said, and the rand looks like it finally broke through that 7 rand level that it had been threatening for so long.
Maybe looking at the retail sales, because we didn't discuss those yesterday, 7.9% growth, and that was from a revised 7.6%. Of course, the market was looking for something a little bit weaker than that.
Yes, absolutely, Stephen. I mean, I think the numbers took quite a few people by surprise. We had actually anticipated, along with the market, we'd been looking for a moderation in retail sales in July because we anticipated that June would have been the high point as far as World Cup spending is concerned. But we know that the June number was revised upwards, and July continued to be strong, probably because the World Cup only ended in July, and we believe that probably played into the numbers as well. But looking forward, we are, given the weak economy and unemployment situation, we are expecting retail sales to moderate going forward. But certainly yesterday's data did play into rand strength.
Of course, we had that current account deficit coming in at a smaller than expected 2.5%, but at the same time, we have seen the dollar on the back foot, haven't we?
Yes, absolutely, Steve. I mean, dollar weakness is also playing into rand strength at this point because it's helping, amongst other things, to support commodity prices. But the rand, I mean, yesterday's data really did provide positive boost for the rand. The current account narrowed to, I think, a 6-year low, and certainly on a fundamental basis that reduces the vulnerability of the South African economy, and so on a fundamental basis is also helping rand strength at this point. So as we said earlier, it seems to be perfect storm, quite a combination of factors playing into the rand's levels at this point.
Well, you mentioned retail sales probably retreating a little bit as the year progresses due to the growth prospects at this stage. We did have the IMF, though, upping its forecast to 3.25% for this year, 4.5% beyond. What's your outlook for the economy at this stage?
Stephen, our view is still very much in line with the IMF. I think it's the Treasury at this point that still remains quite bearish on the economy. So we wouldn't be surprised to see a growth rate in the level of 3% for this year. As you said, we're expecting retail sales to moderate, but not necessarily crash. I mean, the July number was close on 8% year on year. So a moderation is still in line with a plus 3% growth rate for this year.
Of course, along with the current account numbers that came out yesterday in the quarterly bulletin, we also had the Reserve Bank releasing its annual financial statements, and it looks like accumulating reserves has come at a cost.
Yes, absolutely, Stephen. The Reserve Bank indicated yesterday that they'd posted a billion rand loss, and this compares to a surplus of 800 million in the previous year. And most of this, in fact, the bulk of this swing was attributable to the fact that the Reserve Bank had been trying to accumulate reserves to stem rand appreciation and had been losing out as a result because of the widening interest rate differential between South Africa and the basket of currencies that it uses in its reserve accumulation.
Of course, we've had the rand gaining 25% since the start of 2009. We had Reserve Bank Governor Jill Marcus speaking about it yesterday. We also had the IMF commenting on it, but it really looks like their hands are tied at this stage.
Yes, Stephen. I mean, the rand, I think most people would broadly agree, is too strong for the economy at current levels. But as Governor Marcus indicated, there are very few policy options that government has. Know that they were evaluating the possibility of introducing a Tobin tax, but all of these measures that are on the table do come at a cost and aren't always easily implementable. The IMF suggested that South Africa should continue to accumulate reserves aggressively, but now we see that also comes at a cost to the fiscus. So at this point, given the global situation and the fact that South Africa is not alone in trying to prevent the appreciation of its currency, we saw Japan intervening in currency markets quite heavily to try and keep the yen at competitive levels. So it's not just a South Africa problem, and as we said, authorities really have very little wiggle room at this point.